Hey there, small business owners. Welcome to the Tax Talk Podcast, the premier business podcast aimed at unlocking your unique potential. I'm your host, Jared Pallon, and I help my clients do three things: find common sense business solutions, minimize tax and maximize profits, and preserve your legacy. Each podcast episode will dig deep into an everyday problem that small business owners face, and most importantly, explore solutions to these problems. You ready to solve problems? Are you ready to keep more of your hard-earned wealth? And are you ready to preserve your legacy? Let's get to it. What is going on? Welcome to episode 5 of the Tax Talk Podcast. Today, I'm going to be looking at incorporation. Is it right for you? Is it right for your business? What are some of the advantages, some of the disadvantages? And then kind of look at some real world cases that you could maybe apply to your particular situation to determine if incorporation is right for your business, whether you're just getting started out or if you've been kind of down the road of business ownership for a while and you're thinking that incorporation might be a better option for you longer term. So, what are some of the advantages? Number one, limited liability. So incorporating your business provides that kind of split between you and the business. It creates a separate legal entity that allows you to protect yourself against lawsuits and other potentially crippling matters that can come down the pipe as you are conducting business. Another potential option, an advantage for you, is tax savings and deferrals. This is most notably seen when a business owner is able to retain some of the profits in his or her business and is no longer requiring all of the net profits to fund their personal expenses. If you are using all the profits to support your personal lifestyle, then that might be something to consider when you're looking at incorporation. Another potential advantage that you can gain from incorporating is access to the lifetime capital gains exemption. Basically, in a very small nutshell, this would allow you at some point down the road to sell your business and have some of the or all of the proceeds of that sale on the shares of the business be sheltered for tax purposes, which can greatly reduce the tax owing if you are able to kind of build up that business and then eventually sell it off and use that as a springboard for another business or as a retirement kind of plan. So that gives you a pretty big advantage there. And then the other big advantage that can be seen is just via estate planning. So there's different ways to transition the business over to a spouse, to the next generation. You're able to keep that business going as it is a separate legal entity. Whereas if you're just operating as a sole proprietor, when you pass away, the business kind of passes along with you and there's no way to essentially transfer that on to the next generation. So it gives you that vehicle to preserve your legacy through that business and see it continue to flourish after you have moved on from it. So what are some of the disadvantages of incorporating? So number one would be the incorporation costs. I usually suggest to clients that you consult a lawyer if you're looking to get incorporated. Main reason is if you head into a registry's office, a lot of times the share structure won't be set up correctly. Just a number of the smaller, more detailed items can be neglected. And while these things can be adjusted down the road, it just ends up creating additional work on both the accounting and the legal side of things to get things straightened out as far as, the shares, the structure, etc. So there might be a bit of a cost up front there to the lawyer versus just a registry's office, but paying up front to get that legal advice is usually better. But you do incur some fees to get that done, as opposed to just opening the business or carrying on as a sole proprietorship. Some of the other things to be mindful of are the ongoing costs. So once you are incorporated, then you're going to need to be filing an annual return within the jurisdiction that you have registered the corporation. So in Alberta, you need to go into the registry's office on an annual basis, ensure that return is filed with the province. If you don't file within 1 year, they're going to start sending you some letters, and typically within that 2-year no filing period, that's when they will strike your company from the record. So essentially they dissolve it. Your company is no longer a legal entity. And if you are continuing to use it, you then need to go into a registry's office, revive the corporation, which costs, a reasonable amount of money and a lot of headaches and kind of time to go through that process. Another thing to keep in mind is administrative costs. So, you've got the additional tax filing to take into consideration beyond that annual return. Just certain items like that, you're adding that extra layer of, bookkeeping perhaps, instead of just recording the revenue and expenses on your personal tax return. Now you've got the corporate return, then you've got to push out some income to yourself personally. So you might have to generate T4 or T5 slips that you haven't done in the past. So just, fairly simple things like that, but obviously something to keep in mind. And then the other big thing, and this is especially applicable to individuals who are just starting up, is the inability to use losses within that corporation when you're first getting going. So if you were to open up a sole proprietorship and maybe you have a loss in that first year or even into the second year, just for whatever reason, those losses can be applied against other income. Say you're still working for a third party, gaining some wages, and then kind of just starting into this sole proprietorship, you're able to deduct those losses in those first couple of years until you get things going and kind of off the ground there. Whereas if you were to incorporate right away, any of the losses in the corporation, they will just stay within that entity until you generate some profits there to use those losses up. So with that in mind, I just want to look at a few cases real quick. I'll publish a blog with kind of all this information as well, so you can look into that and get a little bit more details. If you got further questions, feel free to follow up. But we'll just kind of hit the highlights of them, and hopefully they kind of give you a bit of insight as to, whether incorporation is good for your business given the situation or not. So let's say you are thinking that maybe liability issues are something that you want to maybe look into. You're a little bit concerned at the possibility of being sued. So you're thinking that maybe a corporate structure would be beneficial. So if you look into the blog, I've got a situation where an individual is running a residential cleaning service. Just goes in and provides cleaning services on an hourly rate. Probably just involves an owner-operator, no employees at this point in time. Is incorporation going to, help at this juncture? Is it going to alleviate some of the liability, the potential for being sued? if something were to happen in this business. Now, I would say there's probably no major safety concerns in this line of work. I think probably the biggest factor for this individual would just be, potential theft claims that could arise. So there might be a way to, speak with that lawyer ahead of time before you get into this line of work, draft up a contract that you can have with, your clients, include some sort of, waivers to theft or damages or anything like that that you can kind of get them to sign ahead of the work, and then to just provide a little extra protection for yourself that way. So seeing as that you're just a sole owner, probably not a huge reason for going incorporated on the liability side with this. So next one, and we kind of touched on this in the advantages, is the business is starting to earn more than you need personally. So typically, and this is kind of a moving target given the fact that inflation keeps bumping costs up, but if you were making, I would say for sure, less than $100,000 of revenue in the business, chances are you're going to need a good chunk of that to facilitate your personal lifestyle after you pay taxes, etc. So if you're under that $100,000 threshold, probably not a huge tax savings or deferral, possibility there. So it would be wise to maybe carry on as a sole proprietorship for a bit. Now, if you start bumping up over that 100,000, maybe it's time to start looking at incorporation, where you can leave some of the profits in the business, pay the cheaper corporate tax rates versus personal rates, and then use those funds to grow your business. Also depends on what type of business you have. If it's just a solo entrepreneur, little use for equipment, probably have no plans for, bringing employees on, essentially you're just providing services, then you kind of need to take that into consideration. If you are down that road, you might need to look into the personal services business tax laws as well to ensure that you're addressing those correctly as well. Third one would be more of the estate planning, that type of thinking. So say you're in a, painter. You provide services to, residential or commercial clients. Basically, you yourself do all the painting, and you handle all of the quoting, the everything to do with the business. That's on you. And you've probably built up a significant amount of value within that business based on the relationships that you've built with other, individuals in your community. But if you were to retire or pass away, chances are, that value is going to stick to you. So there might not be a whole lot of use in incorporating in hopes of transitioning the business off to someone else if the lion's share of the goodwill is attached to you and what you do personally. Again, this is kind of up for debate and kind of should be discussed with an accountant to determine kind of some of those longevity factors of the business. Next one I'll touch on real quick is just expecting losses. As I mentioned before, if you're getting into business, you think there might be a period of time where you're just getting things off the ground, you might be seeing some losses. Maybe it's best to start out as that sole proprietor, recognize those losses personally, and then if things start to trend upwards, you can always, push the business into incorporation. If you have assets previous, you can roll them into the corporation on a tax-free basis. So you have options there. You're not stuck in that sole proprietor mode if you get down the line 3 or 5 years and decide that incorporation is right for you at that stage in time. And then lastly, this one comes up with a lot of clients too, is, should I put my rental property into a corporation? And typically the answer would be no, again with a grain of salt. If you're pushing the building into a corporation, you're going to attract passive income tax. This can be offset by paying yourself dividends, but then you can kind of generate some cash flow issues both within the corp and to yourself personally. Basically, if you are in the real estate business earning passive, rental income, if you can get in excess of 5 full-time employees, then you have that ability to classify that business as an active business and then attract those lower small business corporate tax rates. So at that juncture, it might be worth looking into incorporating that rental portfolio. And again, you could build this personally, and then after you've got the necessary, properties and employees in place, then you could roll all that into a corporation on a tax-free basis and then operate it out of there going forward. So I guess just in wrapping it up, when you're deciding to either start out a business or you've been on that road for a while, there's a number of factors that you need to look into to make sure that you're operating within the correct corporate structure. There are advantages to operating as that sole proprietor versus the corporation, and kind of vice versa. So you just need to look at your specific situation and make a decision that works best for you at that point in time, with understanding that, what I do now, it might be good to plan a little bit ahead, but also knowing that if you make a decision now, you're not stuck with that for life. There are ways to change that structure down the road without a whole lot of problems. So that is it on incorporation. Remember to go check out the blog. I'll give you some more details. If you've got some specific questions on this, feel free to reach out to me, 403-343-7707. Be happy to speak with you about any of your questions regarding incorporation, both now and in the future, and we'll get you off on that right footing to ensure your business is successful. Thanks for watching. Take care, and we will talk soon.